While cost of living pressures remain an intensifying challenge, Uganda, Zambia and Kenya have seen a decline in business activity, with PMI figures facing the downward trend. However, Ghana bucks this trend with its upward trajectory in March numbers, indicating an expansion in business activity. Joining us to unpack the figures in greater detail is Sub-Saharan African macroeconomist for Absa CIB, Ridle Markus. Ridle, a pleasure. Good afternoon to you.
Good afternoon.
All right, I think before we get into the individual countries, just keen to get your thoughts when we look at PMIs on the continent here. What is the overall trend here? Are we seeing a little bit of the downturn that we were speaking about globally, or is it a little bit more upbeat than that?
Yeah, so I just want to add another country to the list. Mozambique also saw its PMI coming in below 50, which also means that private sector business conditions contracted in Mozambique too. And it's the first time in a while, I think, that I've seen so many countries. I think about 4 of the 6 markets outside South Africa, where we look at the PMIs, actually experience a contraction in private sector conditions during during March. But what was surprising, of course, is that a country such as Ghana seemed to have been doing fairly well in March, despite the increasing inflation in that country. And a country such as Uganda, that has been expanding for the past nearly year and a half, they seem to be experiencing some pressure. At the same time, you can argue that some of the markets continue to experience some inflationary pressures. If you think about Zambia, you think about Nigeria, for example, Angola, whereas other markets in the region, especially around East African markets, experiencing much more favorable inflation environment, particularly because of the very positive developments in the agriculture sector in that region, where Southern African countries continue to see drought conditions, and hence food prices are under pressure, consumers are under pressure, they're experiencing, they have to tighten their belt a little bit more. And I think the weaker demand conditions being experienced in some of these markets basically reflect that tougher conditions that we are seeing.
You did mention Ghana, right? I just want to stay with Ghana a little bit because, like you're saying, surprising to the upside here that PMI there, we are still seeing pricing pressures. So what is informing, these sentiments around the private business there?
So first of all, just taking a step back, we have to admit or acknowledge that Ghana's economy has actually, since the IMF program nearly a year ago, did see an improved business and consumer confidence levels, and economic activity started to pick up more notably. However, while inflation has come down and the central bank actually cut the policy rate by 100 basis points at the end of January, inflationary pressures have sort of resurfaced on the back of a weaker currency. We're not sure whether Ghana, for example, will continue with the fiscal discipline as dictated by the IMF program. There's also just broad concerns around the sort of, inflation is still fairly high, so consumers are still under, experiencing very tough conditions. And then, of course, that restructuring exercise is also still ongoing, and there might have been some uncertainty as to when that will be completed. So Ghana is had a good ride in the latter part of last year and even in the first month or so of this year, but some of these uncertainties are coming through. And I think what has happened in March is probably, it's positive, but the question is whether that will be sustained through the year. Of course, higher election-related spending could continue to boost spending. So it doesn't mean that Ghana is going to experience necessarily a weak year. I think Ghana's growth is going to be close to 4% this year compared to 3% last year, but it will not be an even sort of rebound, if you can put it that way.
Another surprise was Kenya, this time to the downside. And I guess that's following that very successful Eurobond issuance. Let's talk about what you are seeing in that territory.
Yeah, look, I was a little bit surprised by Kenya because I was there. I spent a week in Kenya in late February, and businesses were fairly upbeat, especially the ones that I talked to. They the FX issues were resolved, the shortages in the currency market, the currency itself rallied nearly 15%. So I was really hoping that that will sort of, boost confidence levels and see sustained growth from here on. That said, at 49.7, the PMI shows, I suppose, broad stability, a minor contraction, but the way we look at that kind of number is broad stability during the month, although we were hoping for faster expansion. We did see inflation come down in March from 6.3% the previous month to 5.7%. The central bank a week ago did not hike the policy rate and was fairly upbeat about the outlook. So I'm fairly upbeat about Kenya's outlook from here on, especially with inflation coming down and the potential that they could see further policy rate cuts in the second half of the year.
And then touching on Uganda, I think you would have mentioned it earlier, after seeing just over a year of positive, upbeat business conditions, we are seeing a contraction here, or a deterioration rather. What do we make of it, Ridle?
Well, keep in mind that the currency did come under pressure in the past couple of weeks. There were some instances of a shortage of money being mentioned, for example. The central bank called an emergency meeting early March and hiked the policy rate by 50 basis points. And I think that could have weighed on activity there. In fact, as we speak, just about half an hour or to an hour ago, the central bank hiked the policy rate by another 25 basis points. So that is obviously just to re-anchor inflation expectations and also support the currency. But we're still fairly upbeat on the Ugandan outlook, despite the slightly tighter monetary policy that we are seeing from Uganda and the possibility that inflation could edge higher. Base effects coming into play there. We do believe that there's a lot of activity around infrastructure, especially in the energy sector. They're getting ready to pump oil from next year. So the Ugandan economy could still see growth of 5.5%, potentially even up to 6% this year. So yeah, this is just a small blip in a bigger story, and we are fairly upbeat on the outlook in Uganda.
Well, keen to keep tracking these numbers with you, Ridle. It's all we have time for this afternoon. Thank you so much for your time. Always a pleasure. That was Sub-Saharan African and macroeconomist for Absa CIB, Ridle Markus.